Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 2.48% to 28,747. Ethereum down 4.86% to 1738. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as part of our globally extended KS family. What we've just done together is a run-through of the crypto market. This keeps you informed on what cryptos are moving in what particular sectors. This is very valuable information to refer back to in the future. It helps give you a feeling of what is moving sector-wide, but also to better understand patterns within the crypto market. I've left helpful links in the description of this video, such as the Masterclass, our NFT collection, the tax software I use, and you can always reach out to me and directly message me on Twitter at any time. I know that there are quite a few community members, our globally extended family, going through tough times at the moment, going through life pullbacks. Please know that our love and healing thoughts are with you as a community. You're not alone. The sun will come out again, and there is always hope. This is a bit of a special episode on Bitcoin and crypto. Where is the bottom? The first thing we do as crypto technical analysts, we contextualize our analysis. We mark up our charts using the CTKS method. We look at world events and collect probabilities outside crypto because it matters. Then we look back inside crypto, understanding that we need to enhance our pattern recognition. And I'm going to go through a lot of on-chain data in this particular episode. Before we buy and sell, we must master our emotional control. We are professionals. And there's many methodologies to buy and to sell, but it's all about getting on the right side of the percentage. That's rule 359, be on the right side of the percentage. What does this actually mean? If you bought something at $10 and it went down to $5, you've suffered a 50% loss. But when it comes back from 5 back to 10, you've restored your initial position. But actually from 5 to 10 is 100% gain. What we see in crypto is really very violent movement to the upside and to the downside. You want to make this volatility your best friend. That's one of the ways of being consistently profitable in the crypto market. Before we look at crypto, we have to look more broadly out into the main market. And Masterclass students, you'll get this live chart in TM6. When we look at the VIX, the fear gauge of the market, what's the VIX doing? It's coming down. What does that actually mean? When fear leaves the market, what do people do? They buy. And we can see that very clearly. Look at the NASDAQ 100. It's coming up. Moves in the stock market can take some time. I've paralleled it to watching grass grow, but I firmly believe price will hit this resistance line. If price gets above that resistance line, it's party time. Everything is back on. Let's have a look at bond prices. They're just bounced technically, and bond yields, they've bounced down technically. One thing to take notice, when we looked at the DXY, when it was going up and up and up like this, I was saying it's due for a technical correction, and that is what we've seen. And we can also see gold has rallied up to a level of resistance. It's just trying to get past that level at 1868.90. And we can also see that oil prices continue to rise. But remember, price is always moving in a wave, always up, then down, up, then down. This is why we must mark up our charts. Because if we don't know where the ceiling is and we don't know where the floor is. What are we seeing with the put-call ratio? The bearishness is leaving the market. Yesterday, I spent some time going through where we are in the business cycle, and one thing to pay particular note to is that we're in mid-stage, moving towards expansion. We're not in recession, except for China. And China is actually moving out of contraction, which is actually good for the entire world. The key thing to understand here is that as we look across globally, we can see that the countries, the major trading countries, are not in recession. So many people look at so many statistics and they get pretty concerned, and they listen to the news stories, and the news stories say sell, sell, sell. Remember those news stories saying buy, buy, buy? Where did they ask you to buy? Where was price? Many people are brought into markets at or around the top or on the way there. Think about when you're actually told by the media to buy, is that in your advantage? Or is it in smart money's advantage? And when you're told to sell, is that for your advantage or somebody else's? Please let me know in the comments, what do you feel about the current economic system? Do you think we're headed for disaster? Recession is coming. All the portfolios will go down 90% plus. Or do you think recession is some time away? Please let me know. It's important. And what about what's happening with fear and what's happening inside the markets? Do you see them normalizing? Please, again, let me know in the comments. It's really good to discuss these things. What do we notice when we go inside the crypto market and look at the fear and greed index? We can see fear and greed is still at extreme fear, registering 12. Look at this. We've had extreme fear for so many weeks now. Week after week after week of extreme fear. All the while, open interest has remained pretty good, and it's actually starting to trend up. If we look at the crypto fear and greed index over time, we're just down here at the moment. We're at 12. Now, what happens when we're at 12? They're absolutely ideal buying experiences. This was the COVID sell-off when markets crashed down around the world. And look at what we actually experienced. Very, very similar readings. And we can see these readings are really, really good times to enter the market. And of course, most people are fleeing the market except for the professionals, except for smart money. They're leaning into it. The markets are deeply psychological. When price comes up, everybody's happy, everybody's all in and more, laser eyes, everything going fantastic. But when price comes down, what do people do? They clear the floor. They leave very, very quickly, just as smart money is entering and buying up what has been sold. For prices to go up, there needs to be volume. There needs to be people buying. And who is buying here? Certainly not retail mindset people. They're not buying because they're not there. But what happens? Price goes up. All the news is negative. Get out of the market. Everything's going to zero. And then what happens? The price slowly goes up and people just say, oh, it's going up. I have to be certain. I have to be certain. I have to be certain. Okay, let's go all in and more. And then what happens? Pang, it comes down again. This is what markets do. Please do not leave the dance floor when the music is still playing. These are the best songs on the dance floor when it comes down. This puts you on the right side of the percentage. You can see, for example, 10, 5, 10. 10 to 5 comes down 50%, and that shakes everybody out. But it's really, really normal in crypto. And from 5 back to 10 is 100% gain. People need to invert their thinking. But unfortunately, the retail mindset is told that they must feel all these emotional states. Smart money says, bah humbug, I'm not feeling those emotional states. It just loses me money. I get burned thinking this way. So we don't get angry. We don't do anything other than learn and be flexible and be kind to ourselves and be kind to others. After all, this is a profession. Looking now at Bitcoin, Bitcoin is currently trading at 28,846, just below this A level. We can see that it's been wobbling around A and 1 for quite a period of time. In fact, it's been about 14 days since we've been stuck in this particular range. And that actually bores a lot of people. People say, oh, I'm so bored with Bitcoin, because we're used to the speed of Bitcoin. We want it to do something. Come on, Bitcoin, do something. And what do we actually notice when we compare the Nasdaq's directional movement? We can see that the Nasdaq has been going up, and you know that because we just look at the charts. But what has happened here? Crypto is coming down. Why is it coming down? Please let me know your thoughts in the comments. It's really important to discuss this as a community. And where do you think price will be tomorrow? Do you think it will be, for example, A, B, C, or perhaps 1 or 2? Please let me know in the comments as well. The question is, what happened to Bitcoin? We can see that from the 2020 halving cycle, we've had a lot of black swans. We've had so many world events and so many crypto-specific events that have unnaturally suppressed price. If you were to take this price action here, this fractal, and whack it into the last halving cycle, the 2016 halving cycle, you would see that we had no blow off top at all, because these black swans suppressed price. They pushed it down. And when we look at the actual length of this particular chart, what do we see? No blow off top should not be a blow off bottom. Remember what I was explaining previously about the DXY. When we get this unsustainable upward price movement, we expect it to come down and back to levels of support. We've seen it so many times. We saw it with oil. We saw it with gold. We're going to see it with the NASDAQ 100, but in the inverted manner. And I believe we're going to see it with Bitcoin as well. One critical thing to look at when and understand this market. What is Bitcoin and what is crypto all about? A lot of people say, oh, that's easy, Ken. They're currencies. Yeah, they're currencies. They help remittances and they're really good for stuff. What is actually Bitcoin and crypto all about? It's the next generation of the internet. That's the way you need to be thinking about this. You're owning a slice of the next internet, the internet of value, the internet of money. And we're really, really early in the adoption cycle. We've literally got decades to play out. And when we compare growth of crypto to growth of the internet, we can see how far we have to go. And when we see its adoption cycle, we know crypto is only just beginning. And crypto is completely tiny relative to the stock market and to the bond market. If you don't know what crypto actually is, you will get whipsawed out of your positions. Can you imagine going back to, say, 1991 and being able to throw, say, $1,000 into the internet if you could buy it? You know, that thing that we use dial-up modems to access. Imagine if you could do it. You can do it now with crypto. That's actually what is happening. There's one particular incredibly important number that you need to keep your eye on here. And Masterclass students, you'll get my KS model in TM2. You see this red line. What's the current value of that red line? It's 24,673.89. Just up here, 24,673.89. This is a proprietary indicator. I have not released it to the public. Only the Masterclass students can get their hands on this. So what we can see, just updating this C level, the recent price action has pushed price down, but there's actually a lot of support below here, especially around the 27,089 number, the 26,595 number, coming down to around basically C is also where we would expect price to get caught. And that is really important to understand how these dynamics work in a market. This red line has been brilliant at catching price, exponential blow-off bottoms. But hang on a sec, Ken, you said there will not be an exponential blow-off bottom because we've not had an exponential blow-off top. Well, we certainly had a lot of black swans, definitely. And the retail mindset is getting really shaken out of positions. And it's horribly stressful to just watch the news and everybody's saying, sell, 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 only to see the price reverse. So many people have become absolute experts at buying at the top and selling at the bottom. Why is that? They listen to the news. We don't listen to the news. We read the news, we analyze the news, but we listen to the charts. Does it mean that this is the absolute lowest figure, that 24,673? No, it could go lower. It depends on mass psychology. It depends on a lot of things, but it's a very, very, very powerful indicator. It actually caught price when the whole world shut down because of COVID and the US liquidity crisis emerged. You just think about that. That red line, if you bought at that red line, you would be so wealthy. And that's getting on the right side of the percentage. It's like being on the dance floor when the best music comes on, but there's nobody else there except for the professionals. Let's have a little bit of a look into net unrealized profit and loss. I always say you don't have to be a mechanic to drive a car. You just have to know the road rules and what it means. When I talk about enhancing pattern recognition, this is really important. It's an important skill. In fact, it's a vital skill. So what do we see? Price coming down and hitting this orange area, this hope fear area. What is this? This is retail. This is retail thinking. Smart money does not think this way, but we must be aware of what 95% of the market participants are thinking. And what do we see when price comes down and it hovers around, kind of consolidates? That is what happened in 2. What actually happened after that? Price went up. Why haven't I drawn a line here on the COVID low? Because it's not the same pattern. It's not consolidating. It just sliced through and went down to a lower level. This is important. This is part of your practice, if you like. When you look at charts, you need to be really specific how you look at them. You don't make anything fit an idea or version of reality that you might have. You must remain neutral. What about here? We can see price came down here, hovered around a little bit, and then spiked up. We may be getting something like that at 3. Are we expecting it's down further? Maybe, but probably not. Let's have a look. So did it happen here? Oh, but hang on a sec, price is going up. We can't compare something that is going down to something that is coming up. It doesn't obey the law of mathematical equilibrium. And when I was lecturing first and second year statistics, I always gave my students the opportunity to look through charts and analyze them. It's really important that you understand how to analyze charts. A lot of people out there present charts, but they actually don't know the mathematical analytics behind them. They would compare, for example, this sharp sell-off to what we're currently looking at. This is an incomparable state. This is comparable. This point here is comparable. Not so much this one, because it sliced down more. It has more momentum behind it. Our momentum is being caught here. These are all things that we talk about inside the masterclass. We wouldn't talk about this either because price is coming up. We have to compare price coming down, price coming down, price coming down. When price goes up, we don't touch it. There's no need to do it. What about this one? It just sliced through. It's incomparable as well. We need something that's concentrating its focus. What about here? There was a certain amount of focus, concentration, but it's very sketchy, that particular one. So what are we actually seeing? We've come from the green to this kind of browny color to orange. So from green to brown to orange, we would expect a bounce. Green to brown to orange. Here, we would expect a bounce. Just something to bear in mind. We can't make our decisions off one chart, but this is not a bad place to start. And we also have to contextualize everything in terms of what the markets are doing. The markets are looking really, really healthy. When we look at net realized profit and loss, I said I can't do tongue twisters. What are we seeing? Look at this net realized loss. It's huge. It's as huge as point number 2 and point number 3. What about this? Point number 4. It's getting there. Point number 5. In other words, it's pretty extreme. What about the net realized loss? When it came to the COVID sell-off, we've got more loss here than we had there. What about capitulation in the last cycle? We've got more loss here in 1, where we currently are, than we had in 7. That means it's about time for a turnaround. Rule 130 is really important. When people get into the market, first and foremost, they hate volatility. They don't want it to go down. They sure want it to go up. But the downside is just, who wants that? Actually, we want it as professionals. We want to get on the right side of the percentage. You can be on the wrong side of the trade, but on the right side of the percentage and do really, really well. Making volatility your best friend is a cornerstone, a foundation of behavior in the crypto market. Crypto is so very, very volatile. You want to go with it, don't fight it. Looking at total transfer volume to exchanges, we can see we had a big spike in transfer volume at 1 just recently. At 2, we had a big spike as well. There was a little bit more downside momentum, so we may get a little bit more downside, but we know it's already pretty much hedged in. Let's have a look at 3. This was the black swan, COVID and US liquidity crisis. There were a lot of volume transfers at this point, and we saw in the capitulation of the last cycle quite a few transfers then too. When looking at reserve risk, and you can just think about this as confidence, when confidence is really, really high, reserve risk is high. When confidence is really, really low, reserve risk is low. How low are we? If we look at point 1 here, this is where we are right now. It's pretty low. We're talking COVID lows and capitulation lows of the last cycle. If we go back in time to previous cycles, it gets a bit dodgy because it was a very different market back then. But if we look at 1 and 2 and 3, this is a pretty good time to be on the right side of the percentage. One thing that people do when they're just starting off is not apply Rule 56. Don't seek tops or bottoms. Most people want to buy at the bottom and sell at the top. Professionals don't even care about either. We care about weighting probabilities, being like really, really good detectives, and layering our buys at support levels down, and layering our sells at resistance levels up. Enhancing pattern recognition is something really, really important. When we come to the MVRV Z-Score, what do we actually notice here? There's something very interesting that I want to bring to your attention. Of course, we can see this red area is generally indicative of a top. This green area is generally indicative of a bottom. Now, what is happening with 1? You notice this is where we are at currently. And you can see this consolidation and capitulation. Notice this consolidation and capitulation. So what is the relationship between 1 and 3? You know, this is a capitulation from the last cycle. Look at this. Very, very interesting. Note the capitulation went straight down and then started to wobble. Capitulation went straight down and started to wobble. Are we very, very close to a bottom? I actually believe we are. I believe we're very close to a bottom. But does that mean that the volatility of crypto is now moot? There's no volatility. It will just go up from here. Of course, we know crypto is incredibly volatile. It's the most volatile market on the planet. But we want to make that volatility, we want to capture that volatility by buying as low as we can go. And that's all about very short-lived spikes. What you will find is many times, again, it's the patterns which are really important. What do we notice about 2? 2 was the COVID black swan. What did we see in there? It shot down and it had really no basing pattern before it like this. So 1 and 3 are very comparable. 1 and 2, not so much. And why do we feel that capitulation has already occurred, if not just in its final stages? And that's largely because when we look at total supply in loss, we can see the total supply in loss is huge. It's almost when the whole entire world shut down and the supply was in loss there. A lot of people will be selling now, and there are a lot of news stories out there to just freak people out. And why are they freaking out? Because the institutions want cheap crypto. We can see the percentage of total supply, total supply in loss right now was much higher than what it was when we had that initial bottom before things started to turn around. That was after the China miner exodus. Let's have a look at the percent supply in profit. We can see we're really low in terms of profit. Almost COVID world closing US liquidity crisis low. In fact, this is so low that we haven't seen this kind of low in terms of supply and profit being so low for many years, literally many years. The supply in profit is far lower than what it was when the China miner exodus occurred. Now, something to remember as well, there were a lot of shorts getting above this particular resistance line. As soon as that resistance line was breached, what happened? Price came up exponentially. It didn't come up in a straight line like a linear line. It came up exponentially. And this is really important to understand. Prices in the crypto market do not obey linear rules. Are there any other pieces of news that help us to understand? When we look at Terra and UST, Terra Luna created so many problems inside the crypto market. There was basically a depegging, which caused a lot of people to lose a lot of money. And we had faith in those projects. We thought that they were strong. We thought that they would withstand obvious threats. And they didn't withstand obvious threats. This is a big wake-up call to the entire crypto community as well. Build strong projects. To use a parallel, if you have a retail shop and somebody comes up to you and says, you have a security hole here, somebody could easily break into your shop and steal all your merchandise, and you say, just let them try. In fact, I'm going to call everybody and say, please try and break into my shop. And then they break into your shop because you invited them in. This is a really big lesson to the crypto community. We need to stop doing things like that and start being professional. If there is a problem inside a market, fix the problem. People's lives and life savings can be on the line. This is not something to muck around with and play games with. And I know some people may be upset with what I say, but part of the maturing process in the crypto market, we need to think this way. We need to think professionally. The Fed's vice chairwoman has said that the digital dollar could coexist with stablecoins. This is incredible news. Why is it incredible, you say? Ken, why is it incredible news? Because basically the US government and governments all around the world wanted to kill off stable coins because they wanted to just basically launch their own central bank digital currencies. Now, what they're actually saying is that existing stable coins may be okay. They could coexist. And of course, that is actually what is going to happen. And they've just got the wake-up call that these stable coins are so embedded in the crypto ecosystem that to delete them would cause a lot of problems. And the Federal Reserve vice chairwoman said that they could coexist, which is absolutely fantastic. It's really positive news. Tether is also actually launching on Polygon, which is a great piece of news for Polygon as well. It will drive that chain's adoption. And not mucking around, Tether launches stablecoin pegged to the Mexican peso. Last year, Mexico was ranked amongst the top 5 countries globally with the most remittance recipients in US dollars by the World Bank, and Tether tokens, which has the code MXNT, is going to be pegged 1-to-1 to the Mexican peso. It's also interesting to note that 40% of Mexican companies are considering adopting blockchain and cryptocurrencies for their businesses, with 71% in that segment specifically focused on using cryptocurrencies. The key is that crypto and Bitcoin just represent the internet of value, and when you understand this, everything changes. It's like the lights come on. When you're actually seeing price come down to this red line, it's fantastic, it's phenomenal in terms of buying opportunities. And one thing to consider, we've never had a market segment where when price actually trades above the previous all-time high in the last cycle, it's come down in the bear market and crossed that. We've never ever seen that. The past price for the previous cycle on this particular BTC USD is 19,666. I would suggest that that's about the absolute lowest price we'd do, but I believe 24,673 is the more reasonable. So if we set a boundary between 24,673 and 19,666, I think we're being very, very intelligent. Why would we want to put boundaries like that in play? Because we get these long tail rejections. And what does this actually mean? When we look at some type of long tail rejection like this, it means there's so many buyers that sellers have been overpowered. The sellers came down and sold all the way down to here, and the buyer said, nope, having none of that, and they bought all the way back up to here. We want to always capture these long tail rejections. They're so profitable if you can get them. And you can see more in the China miner issue, Black Swan. We had these long tail rejections. This is really, really good stuff. This is what we want to focus on. A lot of people say that if it's a bottom, it will just be a bottom and it won't go below it. We know that's not the case. Crypto is incredibly volatile. We want these long tail rejections. We want to participate in them. They're incredibly profitable. Of course, there are 2 ways that we can do things. We can hold on for dear life and through thick and thin, and that is a strategy. Or we can understand that buying on red and selling on green always works inside every market. Be it bull or bear market, there's always profitability inside a BORSOG market. And it's really important to understand that all investors become traders anytime they buy or sell. Having a diamond mind, diamond hands, and a diamond heart is what it's all about, because you will become wealthy, very, very wealthy with crypto. And it may not seem like it at the moment because price moves in a wave. And the economic system always bears out on what crypto will do. But if you're thinking about it correctly and you're buying on red, dollar cost averaging in, you're embracing losses, and the retail mindset cannot do that. And just remember the 10-5-10 concept. When something starts at 10, goes down to 5, you want to be buying then. And if it goes down to 3, even better. Something to just keep in your mind. When we saw, for example, around the mid-April, we saw price come down 55.58%. Now, if you were fortunate enough to buy at that very bottom, when it came up, it didn't even come up the whole way to start with. It came up 83.72%. You make profits where you buy. And remember, if you're an investor, you're always trading anytime you're buying or selling. So understanding how to trade is absolutely vital for every investor. You're just leaving money on the table if you don't know how to trade. And if we actually zoom out even further, that 55.58% loss actually would have turned into 139.54% gain. If you understand the concept of being on the right side of the percentage, You'll look at the markets in a completely different way. The way to look at it that way is to BORSOG. A lot of people ask me, Ken, what do I do? And I always say in every single video that we do, please bear in mind, you need to have an answer for that question based on your own unique circumstances. If things turn around and go for you, what will you do? If things go against you, what will you do? And if things just go flat and horizontal, what will you do? And this is not just for a trade, this is for your entire portfolio. The other thing to bear in mind, in some countries we're getting close to being responsible for paying taxes for crypto gains. If you have realized gains but unrealized losses, you may want to sell those particular positions and then just reinvest again. That way you lock in the loss and you offset your gains. That can be a really intelligent thing to do. It's called tax loss harvesting. I'm generally against, very, very against selling at a loss, but there are exceptions. So please let me know what you think in the comments. Would you sell to harvest your losses, to create realized losses, and then just flip back in and reinvest again? Because you haven't lost anything. You've still got the exact same number of Ethereum or Bitcoin or whatever, but you've not paid any tax if you've got realized gains in that particular financial year. It is actually something really good to chat about. And where do you think we will head in terms of a low? It's always good to give some kind of range. And where do you think Bitcoin is going in the next 24 hours? You think staying around A or B or even down to C, and C is about 14.05% away from the current price? Or do you think up to 1 or 2 or maybe even 3? Please let me know in the comments. Times like this, when we look at the market and it's all red, if you're just entering, it can be very, very stressful. But just remember, life resets daily, and it's all about the psychology you take with you. And at times like this, it's good to remember Rule 245. You either learn or win. There's no losers in this world. You're either learning or winning, and that's the right way to think about things. And most of all, Rule 219 is really important. Be kind to yourself and also be kind to others. If you're feeling any stress with the crypto market is incredibly volatile. This is just what crypto is all about. But when you learn to harness that volatility, you make it your best friend, everything will change for you. You'll see the markets in a completely different light. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.